Bitcoin analysts are now calling the recent plunge to $113,000 a case of market manipulation, as the price continues to fall despite bullish sentiment. This isn't just a simple correction. It's a reminder of how deeply interconnected crypto markets can be, with liquidity and order books playing a pivotal role. Here's where it gets controversial. While some argue that the decline is a natural market adjustment, others see it as a calculated move to destabilize the price. But here's where it gets even more confusing. The Federal Reserve's Jackson Hole meeting is expected to amplify volatility, creating a tense environment for traders. The price dropped below $113,000 after initially recovering during the Wall Street Open, with analysts pointing to spoofy the whale, a term used to describe artificial buying pressure, to explain the sell-off. Data from Cointelegraph Markets Pro and TradingView shows bid liquidity in the exchange order book was being drained, with $112,300 now a focal point. Popular trader Don Crypto Trades noted that over the past 6 weeks, Bitcoin has been siphoning liquidity from both sides of the market, pushing prices toward $120,000. The local range low at $112,000 is still in play, he warned, emphasizing that these areas often act as reversal zones when prices get close. Keith Allen, co-founder of Material Indicators, added that lower order book liquidity, especially near $105,000, could signal a form of price manipulation. He referenced the spoofy the whale and notorious BID strategies, which have been used to artificially influence price action. Too soon to assume, but the direction of price will be affected, he said. Bids moving lower invite price to move lower. Meanwhile, popular commentator The Kingfisher raised concerns about Bitcoin potentially bleeding further, which could ripple through altcoins. Altcoins are currently balanced, but a 5% move in BTC might trigger 10 to 30% drops in smaller coins, he cautioned. This line of thinking sparks debate. Is the market overreacting, or is there a genuine risk of a broader crash? Yet, some analysts see silver lining in the current pullback. Rect Capital compared the current price action to past bull market corrections, noting that similar retracements occurred in 2017 and 2021, leading to new all-time highs. This cycle is repeating itself, they observed. All eyes are on Fed Chair Jerome Powell at the Jackson Hole Economic Symposium. With interest rates under heavy pressure to cut, Powell's speech could shift market expectations. QCP Capital highlighted that markets are already pricing an 80 to 95% chance of a 25 basis point rate cut by September, though incoming data may alter this outlook. Setting the path of monetary policy is a high-stakes game, QCP warned. This article does not provide investment advice. Always conduct your own research before making decisions.